Hi, everyone. Welcome to Control and Compound. I'm Darren Mitchell, and we're really excited today to welcome some wealth coaches from Control and Compound to share their experiences and what they use their policies for. So, first, I want to introduce everyone. You all know Christina White. Christina, how you doing today?
Oh, I'm super excited today, Darren, to have the team here. Very
Uh,
excited.
Going around the table, we have Connor Eagleson in from Ontario. Connor, how are you?
I'm awesome, feeling energized after our team building and planning yesterday, and just excited to be here.
Big axe throwing winner right there, Connor Eagleson. Congratulations. And we've got Jake Mitchell in the house. Good morning, Jake. How are you?
Morning. I'm great. Happy for the team event as well. Nice night at the hotel and axe throwing dinner, all that. It was great.
Yeah, we had a great night last night, and then we have Dan Spry. Dan, how are you?
Pretty good. Good to be here too, and it's always good to get the team together and spend some time all face to face. So yeah, it's good to get together again.
All right. So I thought what we do today is we're always talking about, oh, you can use your cash value life insurance policy for this or for that, and then we give some examples of what clients do, and oftentimes Christina and I will share. But I thought we'd kind of go around the table today and just say, okay, we're all kind of in different parts of our career. Some of us are younger, like me, and some of us are a little older. And so I thought it'd be neat to kind of go around and see the people in different stages of life what they're using their cash value life insurance policies for. So Jake, why don't we maybe start with you?
Can we give me a sec just before we jump in? I have to remind everybody, all right?
Uh,
Take a minute to remind everybody if you are listening on your favorite podcast platform, please make sure that you subscribe and leave that 5-star review for us. And if you're listening or watching on YouTube, please like, subscribe, and hit that bell button so you always know when new content is coming out. And don't forget to follow us on social media at Control and Compound on Instagram and TikTok. All right, we're good.
Thank you,
Yeah.
Christina. Thank you. So many people in the room. I didn't. I'm out of routine. Okay, Jake, we're going to start with you. So, you're earlier in your career compared to someone like me or Christina. So what are you using your cash value life insurance policy for at this stage?
right now, I'm just building that foundation of my plan out. Just having this my cash value life insurance as that base of my plan. So like I'm funding it. I'm getting prepared for that opportunity so that I have control and access to this money, as opposed to putting in an RSP where I'm gonna have that money locked in, not have access to it maybe till retirement. I know that I can build this money up in here and deploy that when I'm looking to get my first investment property, hopefully in sometime in the near future. And just having that control and having that ready.
Yeah, so really just building control, or sorry, building that opportunity fund where you're in control of the money, and when that ideal investment property comes along, you can take advantage of that without interrupting the compounding. Love that. And then Connor, you're an active real estate investor. So tell us what are you using your cash value life insurance policies for?
Yeah, definitely. I think just to finish or go back to Jake, it's really cool that you're starting this at that point because when we first were saving for our first property, I wasn't using this policy as the foundation. Unfortunately, I didn't know about this yet. I don't know why Darren didn't come speak to me before so I could learn about this. But yeah, we went up the savings curve and then dropped back down to zero because we spent the money on the property without it continuing to compound. So that's really cool that you're going to have that continue to grow, Jake, when you do have that opportunity. But the good news is we did get into real estate and we've got a really cool property that's been good to Maggie and I that we've been able to live in and kind of have tenants support with the mortgage. And we've since moved on from that. So it's a full rental now. And we've been able to leverage that to acquire some other real estate properties as well. So I have money kind of sprinkled across a few different bank accounts that's just sitting there idle. You want to keep a certain amount in the account so that you don't get dinged with all the bank fees. So earlier this year, I was able to consolidate all that together, kind of move it into one real estate account. And then we had some extra money sitting there. So I was all excited and went to Maggie and said, guess what? You get to have another policy. She's, not always as thrilled as me at the start, but when she realized why and what I explained was that now the money, instead of sitting in the bank doing nothing, is in the policy. It's growing tax free. And then when we have tenant turnovers that have happened this summer, it's been a busy summer. Definitely not passive when you've got to replace floors and you've got to paint and you've got to, fix appliances and all these other things that come up. But no, grateful for the good tenants that we've had, but they've moved on. So we can now use the policy and those reserves instead of again spending it going down to zero. It's continuing to grow inside of the policy. and we've borrowed from it. We've, paid for the new floors, paid for a few things we need to turn over the properties, keep them in good condition. And then when the new tenants come in and the rent's coming in, we can pay that back on our own terms. You know, continue to have that money growing, the death benefits there, heaven forbid something happens, protects against the mortgage debt that we have on the property. And then any of that interest is tax deductible when we then, come around to the end of the year and we're figuring out all of our expenses for the property. So yeah, we've created now an and asset. So Jake, I think you're on the right path and saving in a good tool. But yeah, we've been able to kind of move some money around from the idle real estate reserves to now the policy that adds all the additional benefits.
Love it. So Connor and I are both married to teachers, and my wife also got a little nervous every time I'd buy additional policy on her, not fully understanding why. And it was like, well, why do I have so much life insurance compared to any other teacher I know? And anyway, I assured her, I said, if you compare it to how much cash value life insurance and death benefit I have, my only request is you wear a veil at the funeral so they won't see you smirk. So it's all going to work out in the end, and I'm sure Maggie will come around like my wife kind of finally did. All right, so keeping going around the table, Christina, let's jump to you. We've talked some about your policies, so I know you used it for multiple things through the years. Any ones that stick out that you could share?
Yeah, so over time, I've definitely grown different policies for different things almost. So you need a foundation for your personal savings, you need a foundation for your corporate savings. And myself, I've got a business owner, so I got a corporation. My husband's got a corporation, so we've got policies for different things. And I want to talk about the corporate policies just for a minute because they're my favorite because they're the most tax efficient for sure. So instead of having retained earnings inside of our businesses, we use these corporate policies to hold on to them, right? So it's one of my favorite because it grows tax free instead of sitting there doing nothing, as you've kind of talked about with the real estate business. That happens a lot for corporate business owners. We hold on to it for the next investment or to go back in the business. Well, instead of leaving it there, I have it growing tax free, tax efficient, tax free completely. And then when I need to use it, it's always available. So just, a couple years ago, we went and built an Airbnb and we were doing draws. And first you have to put the money down for the land. It was my first time doing a build from scratch. So you've got to put money down for the land to get to the next draw. And then you have to put you got to build enough to be able to get the next draw. And in order to get to those draws, it can be a little stressful. Well, not when you have a policy because I am the bank, right? I get to decide when the next draw is going to be, which was very beneficial in building it out. And so then once the property was completely built, turned around, got the regular mortgage on the property, paid back the policy loan. It's still in there, compounding uninterrupted, and I can use it for that next investment. My husband, he's used his for different pieces of. He's in construction, so we've used it for equipment inside of the business instead of going out and getting those loans or taking cash and spending on those pieces of equipment. We use the policies for it, right? So we built our own corporate bank accounts that we can utilize. Well, in the background, we are still saving for our retirement, right? So in the background, this thing's consistently growing. When we go to retire, we're going to have completely tax-free incomes we can take from the corporation. And then on top of that, we also have an estate plan built in so we can tax efficiently get the money out of the corporation when the first spouse passes away, which, statistically I'm going to live longer. So we'll get a nice influx of cash there. And then for our son too, he's going to be able to take those funds tax efficiently, whatever we haven't spent on retirement, of course. But it's just, you can utilize it in so many ways. And the tax efficiency is huge. Like there's no other vehicle like it for corporate business owners. So it's got to be one of my favorites, the corporate policies we use.
That's awesome. Thanks for sharing that, Christina. So Dan, let's jump to you. So I know you got a spouse and kids at home that keep you very busy.
Yes, they do.
Between running to rinks and paddling and cycling and biking, you're always on the go every weekend. What are you using your cash value life insurance policies for?
Yeah, I've used it for a few things, but the most recent one that we looked at was we were going through a refinance in the fall because we were trying to get the maximum equity out of our property that we could because we wanted to go and build a secondary suite at a property that we own. And unfortunately, at the same time, our 12-year-old Golf had finally passed its final checkered flag and needed to be replaced. And as you mentioned too, the kids are getting older. My daughter's 5'9". She's a rower. She's not a small teenager, so it doesn't really fit that well in the back of those cars. So we had to go through and replace this car at the same time, and I didn't want to do anything that was going to affect this refinance transaction we were going through. And obviously, if you're getting a car loan, it's going to show up in your credit bureau, all that kind of stuff. So I went to my policy instead, pulled the money out of there, gave myself that policy loan, went and bought the car in cash that we were looking for, and then I was able to complete that refinance transaction without having any loans show up. And now I'm just repaying that back, and I'm acting as if I had gotten a loan. So it's going to pay that policy loan back as the income and equity comes out of that transaction. That's going to go back to repay the policy loan, and then I've got that full amount available again for whatever that next opportunity is that comes up. So it's a really versatile tool that you can use it in sort of a similar transaction to what Connor and Jake are planning to do, but just a different stage of that transaction.
Yep. Yeah, I mean, we talk about the infinite possibilities, and that's really the whole concept is it's infinite, right? I love this because everyone has something different. Now I've shared on the podcast before a bunch of the real estate investment properties I did, but I thought I'd shared something kind of different today. Um, Early in the control and compound days, new business, pumping that money back into the business, trying to grow it, trying to hire people, growing that business. But I really thought I had a great opportunity to write a book and kind of, be an authority in, that write a book makes you an authority in the subject matter, and just writing a book or teaching like a podcast. When you teach something, you really get to know your stuff. So I said, okay, I want to write this book. But again, I was pumping all the money back into the business. But then I was like, well, I have these cash value life insurance policies. So I figured out it was going to be about $50,000 to write my first book. And that was like with the editor and the copy editor and going back and forth and getting it printed, marketing and all those things combined. So instead of waiting, or instead of taking the money that I was actively using to grow the business, I took a policy loan, didn't affect my long-term wealth, took that $50,000 policy loan, wrote the book, and that was my first book, Be the Bank, and we went on to become an Amazon bestseller, still an Amazon bestseller, and that's resulted in millions of dollars of revenue to control and compound through the years, and paid that loan back quickly, and didn't affect my long-term growth. And I look back and I'm like, I've done a bunch of things that really helped me, but knowing I could take advantage of an opportunity when I wanted, instead of trying to get that loan, or instead of using it for something that wasn't going to grow the business. I love that. And then the kind of the follow through on that, as I get a little bit older, and I still have no retirement plans in the near future, but as I get a little bit older, what I found when I was younger, I was really looking to grow cash value so I could use it for opportunities. And I'm still at that stage, but now I'm starting to look at some of these balances in my cash value life insurance policies, because I've had them for a number of years, and I'm like, huh, this tax-free retirement is starting to take form. I'm starting to look out a number of years and going, oh wow, if my policy continues to grow like it has been, like for 150 years consistently, there's going to be significant cash value in there, both of my corporate owned policies and my personal policies, that I would love to be in a 0% tax bracket when I retire. I've been in a high tax bracket my whole life, and the idea of being in a 0% tax bracket and living tax free in retirement excites me. So that I thought that was kind of cool. The book was probably the most impactful loan that I've taken through the years.
Hey, Darren, I'm just curious if you, when you were planning all that with the book, did you ever approach the regular bank as a new business owner and ask for 50 grand?
Yeah, Connor, my experience with banks are when I had no money, they didn't want to give me any. And then when I started making money, they were my best friends. So when I didn't need them, they were there for me. And when I needed them, they weren't there for me. And I think a lot of business owners can share that. But I think you bring up a good point, because back to what Christina was saying, as the ultimate place to save your money as a business owner, because you know, business is hard. There's going to be ups and there's going to be downs. And knowing that you can access money, even if you're in a downtime for an opportunity, or maybe access that money to get through the downtime. Like, we've had times at Control and Compound where it's like, okay, this quarter didn't go as well as we were hoping. And those cash value life insurance policies are access to keep the business afloat, make sure payroll gets paid and the suppliers get paid. So I just, you know, having access to cash as a business owner, I think, is probably the most important thing if you want your business to survive. And I think it's the biggest reason why businesses, or 75% of businesses, go bankrupt in the first 5 years. Because, if I had that money in RSPs, or I'd used that to pay off a loan and then went back to that friendly banker that didn't like me at the time saying, well, I paid that loan back really quick on this property, so can you give me the money now? The answer would have been no. So yeah. Okay, so those were some interesting stories, but we got us all here. We're all here. We all have got like multiple stories. Is there any other stories that kind of jump out? Anyone want to share, Christine? I know you got a whack. Anything else that kind of jumps out?
Yeah, one that we haven't really touched on yet, and we talk about on the podcast as well, is kids policy. So it's hard to believe, I know this, but my son is going into grade 11 this year, which is crazy as it is. But we're starting to look at universities and where he wants to go to school, things like that. That's what we're talking about now. And one of the policies that I set up early on was a policy for him. So I set up a policy for him years ago now. It's been growing quite steadily. I always have access to it if I need it. So if I did need to tap into it, I could. I have shared with him that he has this policy. It's hard for him not. He sees the podcast and stuff like that, so he knows what we do. And he knows that that policy is available. So he has pitched some they're all right business ideas my way. There was one time he thought that if he got an electric bike, a Suron, he could be an Uber Eats driver. He tried to pitch me on buying that $7,000 bike. It didn't fly, but he knows that he has the opportunity to approach me if he's got business ideas, which is really cool that I have that access to that cash form if something, did come up. But I also have access to it for when he starts going to university in the next couple years. Instead of, hitting that zero again, we're going to borrow against the policy. I may make him pay it back. We haven't figured that out yet. Me or him, we'll get it done. But instead of just taking it from the account, going to that zero line, we're going to borrow against the policy. So while he's in school, his money's still compounding. We pay back that loan. And then, when he wants to get his first down payment on a property, there's going to be that cash there. He wants to open a business down the road. The cash is going to be there. If he decides that he doesn't want to go to school, that cash is still going to be there. Right. So I do think that setting that foundation up for him was really important to me and my family's foundation, and making sure that that's a legacy piece for me, because it's not just his education. It's his first house. It's his first business. It's his retirement. It's my grandkids' legacy. You know what I mean? And I know it seems crazy, but I've got a kid going to grade 11, which is crazy enough, right? So I think that one, yeah, we're going to start using it a lot more in the future, which is exciting for me because I want to see where he goes with it.
Yeah, that's really cool, Christina. I think the other thing that's really like you're talking about the financial impact, the savings vehicle for the kids, but you guys talking more and more, and like us with clients, about the Rockefeller method and the passing down of the values and the legacy. And the big piece of that's the education piece. And I see this a lot on calls too, is parents are looking for ways to educate their kids on how this all works, and financially, and savings and compounding and control. And so you can use that to teach Ryland, and get him to pitch ideas and like learn about business, learn about entrepreneurship. So I think that's really, really cool that you've done that, and be able to pass down those values and that education piece as well. And just on the education note, another use case for policies that a lot of our clients, they're listening to podcasts like this, that they're interested to keep learning about different financial tools. I know I've talked on here before about like Bitcoin, and not giving anyone advice on anything, but I've done a lot of education myself, and I think our team has as well, as that new emerging asset class. And just another use case for policy loans is, I know I've used my buckets that I talk about, where it's like I've got this safe, rock solid, guaranteed high cash value life insurance. Don't have to lose any sleep at night about this. I know it's going up every single day. We've got the real estate that we just kind of talked about, where long term, I know it's going to work out. It's fairly passive, but sometimes causes some headaches. But it's been a proven tool for a very long time to help people build wealth. So love that bucket. And then for me, like long term savings, I like to now start to sweep some of those extra that I don't need into Bitcoin as a store of value. And I've been able to combine and use some of that cash value when I see a good opportunity. If, Bitcoin's doing what it's doing with volatility, or anyone that's into like stocks, Tesla, Nvidia, you see big swings in those companies as well. It's the same idea, where if you believe in it and you've done the research, that you can use that really safe bucket of the cash value, and then something drops by 10 or 20% because Elon says the wrong thing, or, whatever's happening in the markets, and you see a good opportunity, you dip into it, you go pick up some more shares, you go pick up some more Bitcoin. You can then be in control of what you want to do with that. If you want to sell it to pay it back, or you want to just make payments on the loan, however you want to deal with it, that's up to you. and you've kept the money growing inside the policy, and you've got that and asset. So just another use case. And I know a lot of our clients, I think we hear it more and more on calls, they're interested in that, new emerging technology, AI, cryptocurrencies, whatever that space is. But it's a way to kind of have that safe bucket and then go to explore and whatever you're interested in, and researching and learning about and educating yourself on in those other buckets as well.
Yeah, Connor, I think we could go back 100 years or forward 100 years, and what policies were used for 100 years ago and 100 years from now will be completely different because of AI and Bitcoin. There's always something new, but it always goes back to the basics of, do you have access to funds to take advantage of that opportunity? So there's going to be lots of opportunities that we can't even picture in our heads right now in the next, 10, 20 years. Whatever those opportunities are, I want to have a ready opportunity fund to take advantage of that in a timely fashion. So I love that. Love those points.
Yeah, Connor, I liked it too because I work with a lot of clients where they're talking they've got a lot of money invested in those types of vehicles, investment stocks and that type of thing, and they're looking for a diversification tool. And that's almost they will consider it their fixed income bucket. So instead of taking those low returns in the bond market and really they're not that stable anymore, right? They're looking at using a tool like high cash value life insurance as the fixed income portion of their portfolio to diversify and add all of those additional things while still being able to do those other investments. So I like that point because I do think it hits home for a number of listeners that might be out there thinking they could use it as a tool in their portfolio.
Yeah,
Yeah.
100%.
That's awesome.
Yeah.
And well, I call these. I always tell people, I go, with cash value life insurance, you're not going to be able to impress people at a cocktail party. You're just going to be richer. Like it's like, it's boring but effective. It's that steady 5 or 6% tax-free growth, and then all of a sudden, you started when your child was young, and now they're in your boy's in grade 11, and it's like, wow, well, there's cash value there to take advantage of, whether it be university or business or first house or end, not or, I
Yeah.
should say, yeah.
Yeah.
So that's really cool. And then, the kids' policies are pretty cool when you run out those tax-free retirements for them, because they have the power of staying on that compound interest curve 60,
Yeah.
70, 80, 100, hopefully 100 years or more.
Yeah, they got
it-
time on their side, those kids. They got that time.
Yeah, and I mean, the other thing too is, even if there's outstanding loans, because of, I know, the corporate-owned policies you and your husband have, like, at some point there's going to be a death benefit paid, and that death benefit is a great time to repay those policy loans, and then, the future grandkids. I know,
Anytime
you a grandmother, that just
Ever. Not anytime. Long time
okay,
away.
that's gonna be a long time off. That would be freaky. But yeah, so just literally the possibilities are infinite. So I hope that was a little sampling of kind of what our wealth coaches are doing at Control and Compound. We could tell a bunch more stories, but I thought that was good for today. So Control and Compound, Connor, Jake, Dan, Christina, thanks so much for coming in. That's it. That's all. Thanks for watching. Have a great day.
Thank you for tuning into this episode. The information contained in this podcast is for informational and entertainment purposes only and is separate and apart from the wealth coach services provided by Darren Mitchell and Associates, Inc. to its qualified clients. Control and Compound Financial expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, or any other damages arising out of any individual's use of this podcast or the information in it. The views expressed here are those of each participant and guest and not necessarily those of or endorsed by Control and Compound Financial, its affiliates, subsidiaries, and their respective directors, shareholders, officers, or employees. For full disclosure, visit controlandcompound.com/podcast-media.